All right, so we are going to look out for what do you call IFRS 5. IFRS 5. First, I'll provide what it talks about, summary, and go deeper and solve your question for you. There's one question that for corporate reporting, it is due for you. My boss had a question the time I tell Ross. The last time I solved it was at the north. It's part of your material. I only showed that questions to you and you're good to go. They can repeat and repeat the same figures. What is IFRS 5? It's talk about asset, non-current assets held for sale and discontinue operation. Non-current asset held for sale and what? Discontinue what? Operation. Non-current asset held for sale and discontinue operations. That is what you should understand for us. Now, what happened is that it's an asset standard. So normally, when we don't want to test on impairment, that is the next standard normally we fall on. So IAS 16, 38, 40, 23, 20, IFRS 5, impairment 36, especially, and IAS 2. These three standards, they are in the same neighborhood. They have what you call implicit impairment. This is impairment, IAS 36. There's impairment here. There's impairment also here. So out of these three, for part 3, out of these two, if we say we are doing impairment, we can still give you impairment, but under IFRS 5. I'll explain everything you need to know here for you to understand it for us loud and clear. And we are good to go. Next, you should know the objective of these standards. You see, here you need to use this standard when the entity reclassify non-current assets for sale, or when they're about to discontinue an operation. When they discontinue operation, or when there was what? Asset held for sale. Let me go straight to the game. And I'll walk you through some few definitions that you may be asked to do for us. So first of all, you should know the conditions and there's some few items. So number one, You should know what you call disposal group. You should know what you call discontinue operation. What constitutes discontinued operation? So if I should summarize everything for you, we are going to talk about three things. You should know three things. You can decide to sell off non-current assets held for sale, single. You are selling just a particular vehicle, just a particular building, just a particular office. But you can also have what you call disposal group. What's the meaning of disposal group? Anyone to try? If a single asset, we are selling just one. Disposal group, what will happen? What do you think will happen with the disposal group?
It means that you are selling a group of assets
We
at
are
once.
selling a group of assets at once. So here, group of assets, sometimes it includes subsidiary. Disposing of a particular subsidiary is also part of IFRS work. IFRS 5. So take notice of that. And we are good to go. All right, so then the last thing we have to do is to look out for what we call the discontinue operation. Discontinue operation. This one has to talk about division. A division. So division, normally like segments reporting. So three things that make up for IFRS 5. You see, you have to make sure that you know the condition. These two has the same condition. Condition for classifying assets, these two assets. This one also have its own condition. Please, I want everybody should be aware of the condition. What are the conditions I have to satisfy first before I can classify a single asset as for sale? Or I can classify group of assets for sale, or I can classify a particular division for sale. That is what I want everybody should be aware of. So take notice of that. So I'm through. So I'm now going to pick one after the other to do justice to them. So I hope you can define all of them. Disposal group for level 2, you may be asked to define disposal group. So tell the examiner that disposal group is nothing but a group of assets that are being disposed of together. So try and understand this for us. So group of assets, it includes subsidiary. So group of assets that we have. put them together and dispose. So group of assets to be disposed of by sale. Together, let us see the word together as a group in a single transaction. In a single transaction, they are referred to as cash generating units, subsidiaries. So I always give an example. You have a business, it has cars, it has buildings, it has inventory, it has cash, it has bank accounts, and you are selling all. You are selling everything. This is called a disposal group. Here, let us see the word together. A group of assets that are sold together. Let us see in a single transaction, whatever you write, we'll not even need that one mark. We'll give you the mark. I'm done with the definition for a disposal group. If I'm not lying, you can see for your eyes, 2 marks. Explain the disposal group concept under what? IFRS 5. This is what they can ask you to do. I'm done. Let me tell you the truth. Part 3, we can ask you anything, no. Part 3, the one we ask them is this. And part 2, this is what we ask them. Oh, examiners. They are very interesting. Part 3, we ask them what is discontinued operation. The definition is very terrible and yet straightforward. What can I want to say that? I said, and one baby some. What can I want to say, but that's the one who asks you. But I'll break them down for you. I'll give you the keywords that should be in. That's all. What matters is that the keywords are in your definition. And then that is all. All right, so let me define what a discontinued operations they are by the standard. Then I'll give you their conditions. So conditions for recording a discontinued operation. So let me define it for you. Please try and then understand the definition for me. For part 3. Part 2, you should only know disposal group. What is disposal group? We are good to go. So I've defined disposal group already. So disposal group defined already. I'm on discontinued operation, discontinued operation. What is it? Let me summarize it for you in simplest language. When you say discontinued operation is defined as a component of an entity. A component. Let us see the word a component. Component of an entity. Please, different from disposal group. Discontinued operation and disposal group are not the same. Okay. When I'm done, you should tell me the difference. a component of an entity that has been disposed of or classified as held for sale. So a component of an entity that is disposed of or classified as held for sale. You see, if we are to end here, it will make the story very easy, but the rest are the complicated one. We are now going to tell you which items, and they represent separate major line of business. And three things, we have to see three things here, right? All these three things as part of the definition. And represent separate line of business. Separate line of business. The next is part of a single coordinated plan. It's a part of a single coordinated plan to dispose of a separate line of a business or geographical area of operation. So it's a part of a single plan to dispose of a separate line of business. The last one says that it's a subsidiary acquired exclusively for sale. Please add it to a subsidiary acquired exclusively for sale. So if you acquire a subsidiary exclusively for sale, then they meet the definition for discontinue operation. I'm done. So I've been able to define discontinue operations for you. I've defined disposal group also for you. Please, you can decide to explain this way. That's all. All of them have the same conditions that you need to fulfill before classifying a single asset as held for sale. It's the same condition that you need to fulfill before you classify the group for sale. The same condition you need to fulfill before you can classify a discontinued operation. So I'm now going to walk you through the condition. Then I'll give you the accounting treatment. Then we are done. For disclosure, look for it. So can I go to the recognition criteria? That's the conditions. Recognition criteria. Bracket the conditions. What are the conditions? But before I go to the conditions, the part 3 too, I have to also do you show. I have to do you show. Let me see if Please, discontinue operation does not include abandoned division. Please take notice. It does not include what? Abandon or abandon assets. So please try and understand this for us. There are a lot of questions in your past questions. So I just don't want to bore you. I want to make things flexible for you. And then we go in peace. So you see, you can never go beyond this. So look at it here. Identify two conditions which must be present in order to present the results of an operation as a discontinued. Number two, the accounting treatment that applies. The examiner is asking for the recognition criteria. You see, the recognition criteria, I always explain to you that, in other words, it's the same as two things. Another name for recognition criteria means accounting treatment. But our technical term is called recognition criteria. Like the way the nurses, the doctor, the lawyers use their terms. Now it really sound nice. For example, delegatus non potest delegari. Then you are happy. Nicodemus, then you are happy. The same way accountant, let's try to use our technical terms to confuse the non-accounting people. Recognition criteria. They will think you are calling their names. You are not calling them. It means two things. What are the conditions? And how do we record them? So this is when, and this is how to record them. I beg you, try and understand this for me. So what are the conditions that you need to fulfill before classifying any of this as held for sale? I'm going to take my time to give you the conditions, and we are good to go. If you have any question, ask before I bring in my condition. All right, so if there are no questions, then let me give you the conditions. First condition you have to write for us. So conditions. Conditions. Number one. The asset. Here you can say that it must be probable that the asset value should only be obtained through sale. Yes, so through sale, but not through its principal use. So that is what you should explain it for us. So tell us that the assets it must be probable that the asset value can only be recovered through sale, but not use. I believe this one is a bit clear. So you only come again.
Sir, please come again for the first condition.
Good. So condition number one, condition for recording any asset as held for sale, whether it's a single or disposal or discontinue operation. Condition number one, it must be probable. I use the word there. Let me see. It must be probable, or the asset value can only be recovered through sale, but not, let us see, not continuous use. Let us see the word continuous use. That's the first condition. So if you have a car, a pen, a laptop, a mobile phone, and if you think the value of the mobile phone can never be recovered if you use it, please sell it. Some people, they thought they have an asset. They don't know that they rather have a liability. If they know the kind of liability they have sold it long time. So you can only classify an asset as held for sale. First condition, the condition is that if the value of that particular asset can only be obtained, recovered through sale, not use. So if you know that the car that you are driving, if you use it, you can't get the value. Because sometimes when the asset is going down, it's far better to sell it off than to wait and still use and use and use. By the time you realize, once you cry, you won't get from the asset. Practical example is car. Sometimes when it's worrying, giving you problem, just give up early, sell it, go and buy a new one and go ahead. Oh, you invest money. Like the way betting is. If you stop early, it will be a bit okay because, oh, Charlie, let me win. Let me win. But I realize it has rather win you or won you. So that is how it is. I'm done with the condition number one. Who doesn't understand? Who does not understand? Everybody understand. Condition number two. You can only classify asset as held for sale if it is probable that the sale will be completed within one accounting year or one financial year. Who can explain this to me? Who can explain this to me?
Sir, please, does it mean that you can only classify an asset for sale if there's there's a ready market for it?
Okay. So the standard went ahead to give some situations what shows that you can sell this asset within 1 year. It's rather unfortunate that when we ask the question, we ask them the condition, students will be rather giving us the examples that the standard gave, rather than giving us the main condition. Please, the conditions are only 2. But this ones fall under. What can give you assurance that your sale will be completed 1 year? 1, when the entity has made a reasonable effort, when the entity has made a reasonable effort to locate a buyer. How? By charging fair price, please. Yeah, by charging what? Fair price. So if the asset has been overpriced, then we already saw better. And better watch it. Oh, I do be a ton in there. Toyota Venza. The Toyota Venza. The Acrobatus own. That you have used and now you are selling. The fair price, the fair value is, you can say fair price or fair value, please. The fair value is, let's say 200,000, and you are saying you are selling it 500. You are not ready to sell. Asset in a better. It means management have made intention or ready to sell, or the asset is ready for its immediate sale. I don't know how you understand it. The asset should be ready for its immediate sale. Let me explain this point to you. Some people, they are not ready to sell the asset. Please, if you pass through town, do you see for sale on cars? Have you ever seen for sale on car? For sale on car. And the car is moving. And the car is moving, right?
Yes.
Okay, let me explain. The standard is saying that if you see any moving car and they've written for sale on it, and your money is ready, they should give you the car that day. But what it happened? The car has loaded goods. It's going to Boko and it's for sale. And you pick the number and you call. Will the person give the car to you that day?
No,
Why?
you have to negotiate.
No. Imagine you have negotiated everything, payment has been successful. Will we get the car that day?
Once payment has been made, then you get your car.
But this car has loaded goods and they've informed that it's going to upload goods at Takwa.
Then you will not get it that day.
Good. So here it means per the requirement of IFRS 5, the car is not ready for its immediate sale. So they cannot classify such cars for sale. So if you meet anybody who's ready to sell his car, the standard is saying that when I meet you and my money is ready, negotiation is being completed, even if you are going to the hospital, you have to walk to the hospital and give me the car. Please, you understand this condition? I know that. So asset should be ready for its immediate sale. And yes, sir. I didn't make it so now the year. That is what we are trying to say. And then once I will talk one day, look at some fine age, Obi ba so ton manu. And can't say any person China me fam go charge job back on Bransa. As I'm about to amount. That is what we are preventing. marketing and advertisements has been made. Marketing and advertisements should be made. And then, please, these conditions are very important too. I don't know where you pass to understand them. Try. That shall know you. I have to give you the exceptions. Remind me before I finish the game. I'll give you the exceptions to these standards. All right, so let me continue with the conditions and give you the remaining ones. Here, advertising has been made. You've located the buyer, and then you've done active. You do the price, and then we move with the game. They just dropped something for me to share it with you. So we'll do that. All right, so let's move on with the storyline. Before I move on to the next show, okay, so I've done that already with you. I've done this. Management should commit, okay. Done that. All right, so I think I have to put the conditions here. This one have to be fair valued, fairly priced, but I brought it here. Fair value, meaning that the assets have to be fairly priced, and then that is all. Fair value. It should not be overpriced. I'm done. Now, 11, the accounting treatment. You see, we've given you the condition. Both all the three items, they have to meet this condition before you can dispose them, before you can classify them. They have similar treatment. The non-current asset held for sale, all of them are classified under non-current assets. It's between non-current and current asset on the balance sheet. And then we move on. So take notice that discontinue operation, disposal group, non-current asset held for sale, you classify them under between non-current asset and current assets. They come in between. Or you can classify them within non-current assets. Never and never and never add it to PPEs. We beg you. It's on its own. It should never be added to PPE. We need a carrying amount or one line item. All right, so I'm done with the condition. The last thing I'll do is the measurement. But before I do the measurement, there's something I would love to share with you. It's highly examinable, both part 2, part 3. Because something scope, you must know things that fall within. Things that fall within IFRS 5. The examiner by all means. We can never set question without it. So you must know what fall within the scope of IFRS 5. And you must know what does not, what can never be classified under IFRS 5 before I start the measurement. Then I saw for IFRS 5, there's nothing again. Please, asset to be abandoned. You can never classify those assets as held for sale. I beg you. So first exemption. Tell the examiner that it apply IFRS 5 applies to all non-current assets held for sale and discontinue operation except, so the following can never be classified under IFRS. Number 1, non-current assets that are to be abandoned. Or destroyed.
Oh.
Please, who can explain why you cannot? All right, so please, I hope you understand that non-current assets to be abandoned, because the reason is that you can't get a value through sale. So that is why. Item number 2, that we cannot classify them under non-current assets, deferred tax assets. Deferred tax assets. If you see them, don't worry yourself. Item number 3, which can never be classified as held for sale. The part 2, take notice of. It came November 2017. Assets under employee benefits. Asset arising from employee benefits. Asset arising. Who can give me an example? Asset arising from employee benefit. Which standard is that? Which standard treat this? Which standard covers asset arising from employee benefits?
IAS 19.
IAS 19. Please. Employee benefit assets can never be classified under IFRS 5. Never. Item number 4 that we can never classify them. Financial assets within the scope. Financial assets. Within the scope of IFRS 9. All this can never be classified. Number 5, the fifth one will blow up your mind. November 2017. Investment property held under fair value. Specific, this one came. Investment property held under where? Fair value. They are not supposed to be classified under IFRS 5. So take notice of that.
Sir, please kindly go back and let me see your board.
I'm fine. You? Yeah.
Thank you, sir.
Good. Now there are 3 things. Current assets and current liabilities. They are also not qualified. Then I'm done. Current assets and what? Current liability. They don't also qualify to be classified under non-current. There's something I call it net asset or other assets. If you see the word other assets, it will refer to this. Do not classify them. Now, you see, for me, I'll give you practical illustration. No. Let me give you practical illustration. Practical. Back it with illustration. The question your examiner asked you was November 2017 question. It was very detailed. November 2017. Take me there. IT man, take me to November 2017. Go now. Go to the first question, question 2A. Question 2A, November 2017, question 2A. The question was testing candidates on things that goes into the scope of IFRS 5. I was so shocked. I'll come and treat them for you. So investment properties and a fair value. Please, is it part of IFRS 5? They say Attack K Limited has the following assets, which it would like to classify them under IFRS 5. Today now, I want to do it today, right now. So according to IFRS 5, the requirement says what? Calculate the carrying amount of asset that can be classified. Asset that can be classified. Number 1, investment property under fair value. Can they classify it?
Yes, please.
Hey, are we safe?
Yes, can.
Guys,
Hey, hey, no, sir, no.
read your point 5.
Sir, please, investment property held under fair value.
You can never classify it. This is an exam question, no. And it came November, and you also write in November. Then land used as company car park. Can you classify it? And land,
No, please.
why?
Yes.
You can't classify it because it is something that was for the staff. You said something relating to staff.
No. I only say employee benefit.
Yeah, employee benefits.
No, this is not employee benefit. This is a company
Hey.
company's car park. Company's
Mm.
car park qualified to be classified as what? Held for sale. They are selling their car park.
Oh, okay.
So that one is allowed. The one I said on employee benefits is when they go on pension and you are doing some adoya for them. Anytime your employees go on pension, you have some package for them. And you have saved money to buy a lot of those packages. So those packages are assets. You can never say you are selling them. Did you agree?
Yes, sir.
Okay, sir.
So the staff thing I said, it should be like packages, compensation, benefits that you want to give them when you go on retirement.
Mm.
Imagine when everybody go on retirement, you buy the person private jets. And every year people go on retirement. So what happened is that this year, you have a lot of private jets. You are here to give it to those who go on pension. Can you classify those private jets as held for sale?
No.
No.
Aha, so that's the only situation. Please, trade receivable, can you classify them as held for sale?
No. Never,
No.
never, never.
Why?
Current assets.
Current asset. Have you seen? So,
Yeah.
already Nankasa, two things are off the table. Two of us.
True.
True.
Plant, health, and the cost. Yeah, there's not
Yes.
to confuse you. Whatever it is,
Yes.
so long as it's plant, it can be classified as held for sale. Plant, the Yamboni Dinwum. Now, the living legend. Let's go to the living legend. The part 3. Part 3 is there. Almost everything. When you want to do it, they bring something like that and then the impairment. There's something I'm expecting for reclassification. Come on, Yamami, El Patron Cabedo. It should be like a disaster. If they should do reclassification for me, I'll be very happy. I will teach reclassification. Go. Come here. This question. Let's go up. You see, there are items here, right? Have you seen inventories here, right?
Yes.
Yes.
Somewhere. Trade receivable.
Mm-hmm. Inventory.
Trade receivable. Inventories are what?
Trade payables.
So if you are calculating current amount, you add them. But if you are looking for the IFRS 5 assets, they are not parts. Do you agree or you don't agree?
I agree.
We agree.
This is a cash generating unit. Part 2 and part 3, there's something called disposal group. What is disposal group? They are a group of assets we are selling together. You can never single them out. True or false?
True.
They move together. So if you are looking for their current amount, they put all of them together. But if you are looking for the right figure for IFRS 5 per se, it should be the first two. True or false?
True.
So does it make the question difficult? No. So I'm done scanning through for you to see the exceptions. The exceptions are very important. I remember this question. Is it this question that they asked them to do something? Let me show you. I'll come and solve this question. Look. In respect of Asawasa Limited, the year ended 31st December 2017, show. They say show. And briefly explain the amount recognized as non-current assets under what?
IFRS 5.
So show. When you are done, tell us the right asset. So without wasting much time, the only asset is land and building and what?
Equipment.
That's all. The rest, they are not part of the storyline. So on that note, I'm done with the scope. It's the most important thing on earth.
Thank you.
Or else you go and add things that are not parts to it and you find yourself into trouble. Next is the measurement. Another wahala don't do there. Right after the measurement, I'm done. But before I start the measurement, there's something called reclassification. It's under this the condition. What are the two conditions for recording asset for sale?
Still must be highly probable.
Okay. Meaning that it must be sold within what?
A year. One
1 year.
accounting.
What if after 1 year they have not sold the car? The asset is still there. What will happen?
If it's
You have to reinstate it back.
by management action. If it's not by management action, you will classify.
Good. So here, when the asset, when asset is being classified for more than 1 year or after 1 year, sale have not been made, look for the reasons why it caused for the delay or sale has not been made. If the reason is by management, by who? Management. For example, the asset was overpriced. No advert was made. Oh, then the standard said that you have to do reclassification. And the part 3 is, I am looking for a serious setter, examiner, that will do this question for me. I'm not saying the current examiners are not serious, so please. I'm just trying to say that thing. That is the angle they're heading towards. So they have to give me a question where we have to do a reclassification. Then, what if the condition is not by management? For example, I need a permission. Government supported me to buy a car. And they said that as part of the condition, before I can sell the car, I need a permission from them. I've classified the car for sale. I've met all the conditions. I wrote to them that I'm selling the car. They said they'll get back to me. You know, government office. And when things goes there, they will get back. The year has ended. They've not gotten back to me. So here, the standard says that because it's not by management, you can go ahead and sell what? Classified as what? Head for sale. Do you agree or don't agree? Please, do you agree or don't agree?
Agree.
Okay. If you agree, there's a question. It came both part 3 and part 2. The same question. Word by word. A better part 2 for and a better part 3. That is why some of these standards I combine part 2 and part 3. Let me show you the question. Word by word. Figure by figure. It's a theory question. This is the question. Let me read the part 3 first. To prove to you, to boost your morale, let you see the heading, or else you tell me the target. You didn't let us see the heading. This, which year is this, and which paper is this? Year and the paper. I need a confirmation.
2018, paper 3.1.
That's
Level 3.
reporting, right?
Yes.
Good. Corporate reporting. Question number 2. Question 2D. Let's all go. Explain with justification whether each of the following could mostly likely be classified as a discontinued operation under IFRS 5. Number 1, a reportable operating segment that met the definition of held for sale after the year end, but before the financial statements were authorized. Can you classify it as held for sale? Can you do that? Can you do that?
Yes.
Hello.
Hello. Hello.
Hello, sir.
Please, can we say that can we classify as held for sale? Somebody say yes. Why yes? They met the condition after the year end. This is a non-adjusting event, so hence they cannot classify as held for sale. Agreed. This is non-adjusting event. IAS 10. Now let's go to number 2. A reportable operating segment that was closed down during the financial year. The assets of the segment were broken up and used in another division of the company. Can they classify this as discontinued operation?
Sir, please no.
Why?
Sir, please, because the assets, no, from the operating segment is still being used.
Come again.
Because the assets are still being used by other divisions of the same company.
No, but the current segment has been closed down, right?
Yes.
Once you have closed down, once you have discontinued, it qualifies. Agreed. Once you have closed down, I'm coming. No. Have you seen UT Bank?
Yes.
Have you seen UT Bank?
Yes.
In Unibank and the banks that they collapsed them, didn't they use the asset to do something else?
Not all of them.
Didn't they use the asset to form a new bank? Some of the assets
Yes.
is sold. What happened is that once you have shut down an operation, as to whether you are going to use the asset to do something else, that one is outside the scope of what? IFRS 5. So long as you have closed down a reportable segment, it's qualified to be a discontinued operation. You see, the current segment was shut down, right? So it means that segment A was shut down and its asset
Well,
was
I placed some question, be 2 months or 4 months or 5 months. From his question some time ago, I just peeped and when it was there. I said, Zuza. Oh no.
Hey, I'm on for Pastor.
I will see.
now. What happened is that because they closed division A and used the asset to set up the division B, in division A's book, it is what? Discontinued operation, true or false?
True.
Finally, a division of a business classified asset for sale that was correctly treated as discontinued operation in last year's financial statement, but this has not been sold by this year and due to sale being referred to the National Insurance Commission, which regulates the insurance industry. The commission is not expected to report its findings until 6 months after the year end. So can they still classify it as discontinued operation or they cannot? Who
So
remember
they can classify it
why?
because it is beyond management control.
Good. So they can still classify. That's all. Your question anyway. And I was so shocked for me to see this, the same question in financial, this corporate reporting, the same question in financial reporting. And let me give you practical year. So that I do the mathematics. Which of the one that came first? All right, so this is for your eyes. And let me go up there to let you know which year exactly they brought it for you to see. And you tell me the paper, whether it's a corporate reporting paper or a financial reporting paper. You tell me the year and whether it's a financial reporting. Which year was that?
May 2020.
2018.
Good. No. Is it 2018 or May 2020?
May 2020.
What we just look was 2018 or
That one is corporate report. This financial reporting.
yeah, okay.
The same thing came in financial reporting 2 years after. Exactly 2 years after, the same question dropped. And here is it. A reportable segment that made the definition of head for say after the year end but before the financial statement, 2 marks. A division of a business classified as head for sale that was correctly treated as a discontinued operation for last year, but it was not being sold by this year end due to the sale being referred to security. The SEC is not expected to report. Well, look at this. I'm done. So I'm done with this. Please, do you all understand? Once you're going to get a question on the neighborhood of IFRS 5, I wish you could spend some time to understand it deeper. You see, our standards are tried and tested. Now let's go to measurements. We have initial measurement and subsequent measurement. Initial measurement. The very first day you met the condition. 1, it must be measured at the lower lower of carrying amount. And I believe everybody in this room can calculate carrying amount, right? And fair value less cost to sell. Fair value less cost to sell. Here is the same as fair value less cost to sell. So that's all. Selling price minus selling cost. Please, who don't understand? Carrying amount, that means you depreciate the asset, is equal to cost minus accumulated depreciation up to the date you met the condition. The cost of the asset minus all depreciation charged so far. Please, here there's no IFRS 5 for that IAS 16. So to depreciate an asset, we need IAS 16. It can also be revaluation. You must capture all revaluation gains and losses up to the date. And that's all. Two things will happen. If fair value less cost to sell is lower, then the difference is recorded or recognized as impairments. So practical example, if the carrying amount is 20, fair value less cost to sell is 15 at the initial date. It means which one is lower? Which one is lower?
Fair value less cost to sell.
15.
Good. So here, the asset value becomes 15. So you should, under your non-current assets, you write, maybe if it's about plant, you see plant held for sale. 15 is lower, so record the 15 in your books because lower. But because it is a fair value less cost to sell, what's the difference between 20 and 15?
5.
You record, you go to your P&L and record impairment of what? 5 series. That's all. It ends the matter here. So that's the initial recognition. Two things will happen. That's number one. Number two, if cost is lower, what happened? Lower. AKA do nothing. Do what? It means no revaluation gain, we beg you. No initial revaluation gain is ignored. No revaluation gain. I'm done. Practical illustration. Imagine the carrying amount is 30. Fair value less cost to sell is 45. Which one is lower?
Carrying amount.
So here you record the asset at carrying amount, which is 30. Never make a mistake and say, oh, there's revaluation gain. Of what? What's the difference?
15.
It doesn't go anywhere. We don't need it anywhere. Don't make IFRS 5 does not. It forbid the initial revaluation gain.
Target, good evening. Please, I beg you. My network, so when you started the initial measurements, I didn't hear anything.
Okay, so initial measurement means that the very first day you met the condition, what will be the value? You see, measurement talks about the value. We say compare the carrying amount to the fair value less cost to sell and select the lower of the two. So, whichever one is lower, pick it. But two things will happen. First condition, if the fair value less cost to sell is lower, like 20 against 15, select your 15 to represent the value as the non-current asset figure. And at the same time, record record 5, the difference as impairments. That's one condition. Second condition, what if the current amount rather is lower? I mentioned the cost. It's supposed to be current amount too. The line is really drumming. Now you say do nothing. No revaluation gain. Let's go to subsequent measurement. At the end of the reporting period, subsequent. So normally this is what will happen. The most trickiest question will be like this. The classification was made here somewhere, let's say June. This is January. And this is where they are reporting December. So first of all, you must do your initial classification here. So this is the point where you compare two things. You compare the carrying amount by depreciating the assets up to this level. Then you compare it with the fair value less cost to sell. Then when you are done, you relax. Then at the reporting date, when you are preparing your financial statement, reporting, what will you do? That's the meaning of subsequent. There are rules. First rule, no depreciation. No what? Depreciation.
Hello, Targets. Please, can I see the screen before no depreciation?
No depreciation. Subsequent measurement. That means at the end of the reporting period.
So target, please, the January, June, December, and then the CA, and please, can you explain to me?
It means that this is when the classification was made. Classification, held for sale. This is where you made a condition. This is where the asset was classified as held for sale at this day, June. So first of all, you compare the carrying amount to fair value less cost to sell. Carrying amount, you can calculate the cost minus accumulated depreciation. Then you now compare with the fair value. That's what we call initial measurement. But the subsequent measurement is at the reporting date. This is what we call the subsequent measurement. After the first one, how do you do the remaining ones?
Hello, back here, man.
There are rules. There are rules. Rule number 1 for subsequent measurement: no depreciation. We don't depreciate assets held under fair value because you cease using them. Like I told you, if somebody said he's selling his car for sale, please, if you see any for sale at the back of the car and they are going long journey, you want to disturb their life, just call them and pay them their money. They should give you the car. If not, then they are not ready to sell. So asset that we are selling, we don't use it. That is all what the standard says. So no depreciation. You cease charging depreciation. So here, once you classify here from here to here, no depreciation. No what? No what? Depreciation. We don't depreciate asset classified as held for sale. No. I'm true. Then, at the subsequent measurements, you still compare. You still choose the lower of the carrying amount and fair value less cost to sell. Here it will be the previous valuation. That's all. Here two things will happen. Two things will happen. If, number 1, the fair value less cost to sell is lower, again, there will be further impairment is recorded. Comma, further what? Impairments is recorded. The difference is the impairment. What's the other way around? I'm about to make my last statement. Other way around. If the carrying amount is lower, then what do? Comma, if the carrying amount is lower, comma, then revaluation gain, revaluation gain, this is for part 3. Revaluation gain is recorded, but limited to previous impairments. That's all. This one, the part 3, use red pen to write it too. I beg. Use red pen to write it. On that note, I have entirely done every part of IFRS 5. The only thing I've not done is 2 things. 1, though I'm expecting it in recent exams for ICA final level. Reclassification. So an entity will classify an asset as for sale He will stop depreciating and everything. After 1 year, the asset is still there, and therefore we have to reclassify it back. Now, you have to calculate all the depreciation they've no charge. They've tried setting one of the questions, but it couldn't appear clear. Yes, your corporate reporting examiner have tried. I think August 2022, he tried setting a question like that. But it was not too clear for most students. So I'm still expecting it to come back, for him to come back and come and redeem his point. But it has kept long, August 2022 up to now. Or he won't come back again. All right, so we are done. The other items I've not done with you is just the disclosure requirements. That one you can just read them. That's all. Apart from that, there's no question. So first, let me pick question in your material. But before that, let me go to the level 2 small. Okay, so level 2, level 2, level 2, level 2, level 2, level 2. I'll pick just 2 questions to illustrate. Okay, so software line. This one lets you just 3 minutes, 2 minutes to just clear this question from the way. I will solve them on a face like this because there's nothing inside. Please, here you should know how to calculate depreciation. Software line limited has a plant and the cost is 40. Let's do the comment first. Discuss how this will be accounted for in the financial statement. It means what will go to P&L, what will go to financial position. The cost of the asset is 40 and it was purchased on 1st January 2013. The useful life of the asset is 10 years. So what's the depreciation per year? Automatically, what's the depreciation per year? Depreciation per year.
4,000.
Good. That's all. Unless there's scrap value. That's 4,000 per year. The plant was being used as part of business operating capacity. However, on 30th of June 2015, relax. How many years since they bought the asset? How many years so that we can calculate accumulated depreciation?
At least 2 years.
Are you sure?
Says 3 years.
Hey. More answer. More.
It's two
2.5.
years. 2 years, 6 months.
6 months.
Good. 2 years, 6 months. Do you agree or you don't agree? Because 2013 will be full year. Me like this, when I go to the examination room, I don't feel shy to count my fingernails. So I'll count, Papa. You see me counting my fingernails. 13 is 1. You see, some of us, we are old school. Old. So 2013 will count 1. 2014, I'll count 2. But in 2015, they say June 30th, so half year, right? So I'll say half. So 2.5 years. So who can calculate the current amount for me? Start to work. So first, to get the current amount, what is the cost of the asset? $40,000. Calculate the depreciation, the accumulated depreciation for me. Accumulated depreciation. What's the best way to calculate it? Open a bracket. Say 40,000, there's a shortcut I can use, but that one, You only do it when you are designing marking scheme. Over 10 years times 2.5. Do you agree? That is 2.5. What do you get as your final answer? Please, what do you get as your final answer?
10,000. Someone should check it.
You are right. So you say 10,000.
10,000. 10,000.
So what's the carrying amount? Let me give you a secret how to answer ICA
30,000.
standard question.
30,000.
If you meet questions of this nature, whether you understand what they've asked you or not, do what I'm doing. What am I doing? When they move, you move. When they stop, you stop. You see, I've not read the entire question, no, but I've started solving what I've read. That is how we want you to do. But somebody wants to read this question 3 solid times before you start solving. No, I don't understand the question. Are you writing textbook for? No. So when you read, you stop. Let me tell you the secret. This is how we set our questions. Number one, we will give you the date the transaction took place, the first date. Number two, we'll give you a second date. When you see us giving you a second date, stop. Calculate the distance between the first date and second date. Use that one to multiply by the depreciation to get accumulated depreciation. Subtract the answer you get from the original figure they've given you, like the way we've done here, 30,000. Whether you understand, whether it solves the question or doesn't solve the question, please do it. We beg you. Then you continue reading again. Says Softline Limited made the decision. They'll give you a figure. Come and compare. Make a decision to classify the plant as held for sale, and an agent was appointed for the sale. The plant had been what? The plant, okay, agent of that plant for sale of the plant. That has been started advertising the plant at a selling price of 29. Which was considered to be what? 8 what? Fair value. Please, why they say it's a fair value? Who can explain? We'll make some comment with there. Why they say that this is a fair value? Because to meet the condition, the asset must be fairly priced. The selling expenses is expected to be 1,005. So we can calculate the fair value. Let's go to solve. Let's do it. Fair value is 29. Less cost to sell is what? 1,005. So what do you get?
27,500.
So 30,000 and 27,500. Which one do you pick? Which one do we pick?
27,500.
That's all.
Sir,
Uh-huh.
please, I want to say something. You
Say-
see the carrying amount.
Yes.
You said that it is the cost,
Yes.
minus accumulated depreciation.
Yes.
Then minus the depreciation for the year.
But when you say accumulated depreciation, it means all depreciation charge from the start up to the current phase. Do you get it?
Yes. So the current phase was 30th June 2015, but the reporting date was 31st December 2015. So I feel like that depreciation for the year should also be calculated. Like, do you get it?
Good. Kasi, what happened is that we have to depreciate the asset up to the date you change your mind. We can't depreciate the asset for the entire year.
Oh, okay.
It's against the IFRS rule. The
Okay.
depreciation should end. So that is why we depreciate the asset for 2.5 years. Because in 2015, we made exactly June. That is why we changed our mind. So depreciation for 2015 should be only 6 months. We cannot depreciate for the entire year. Agreed.
Okay. Yes, please. Thank you.
Good. And once the asset is being classified as held for sale, from July going, no depreciation.
Okay, sir.
No depreciation. But I'm still looking for a challenging question. I am throwing this question to IC examiner. I know that you'll be watching our videos or be hearing from us. So please, I need a question. I know that any question I say, you do it for me. This one, do it for me. Challenging one. The one that will be reclassification, adding back depreciation. Please remodify the August 2022 question you brought and bring it back. I need it. Thank you.
Target, please let us pass and go so that those coming will answer those questions.
Why?
Yɛbɛkɔ pass akɔ afei na ɔyɛ no bɛ sɛ ɔma yɛ dedenden.
I want you to be. I want you to feel happy. Some of the question after you pass, you feel happy that question will be anything, but remember many of it.
Debi yɛpɛ cool chop ne yɛkɔ.
Now we are done. So here, what do you do? They say if the fair value, let's go to sell is lower. What do you do?
Sir, please, you recorded 27,500 as non-current assets.
Thank you. Then again, what do you?
Then the difference between the 27,500 and the 30,000 would be sent to P&L as impairment.
That's all. Hey. The level 2. This is what you're supposed to know. That's all. It ends here. So whoever understands this FR paper, you are done. You have a problem.
Yes, sir.
Then you see, this is initial. Then let's go to subsequent. The asset has not yet been sold by the year end, 31st December 2015. It has a fair value less cost to sell of 24 at this date. So now you see, they have given us another valuation again. The first one we did, we had 30,000 against 27,500. But as at the year end December, the asset value is now 24. So here, as at this date, you have to do another valuation. You call it subsequent measurement. So with a subsequent measurement, you still bring your carrying amount. What's the carrying amount? As at that date, the person that will get it right.
Sir, please, it's
27,500.
30,000. Sir, please, it's 27,500.
Can I take your first answer?
So I wanted to say 30,000, no, but since you went to put this one as non-current assets as the carrying amount, no, from that time, I think you use the 27,500.
That is all. So you see, after you have used the 27, now the lower one runs through. So the lower one now becomes the asset carrying amount after this valuation. Agreed. Agreed. So no depreciation, so still record the 27,500. What is the fair value less cost to sell now? What is the fair value less cost to sell now?
24,000.
24,000.
So which one do you pick?
24,000.
24,000.
So the value will be. So is there any impairment? Is there any impairment?
Yes, please.
Yeah.
There's impairment.
Impairment of
3,500.
3,500.
good, good. So what's the total impairment that needs to be recorded in this question? So as at December, what should be the amount that will go to your P&L? Because the examiner said what goes to P&L, what goes to balance sheet. So let me do the P&L extract for you. What will go to your P&L? What will go to your financial position? Examiner want to see that. P&L number 1. The first 6 months, 6-month depreciation, true or false?
True.
That will be 40,000 over 10, 6-month depreciation times 1/2 or 6/12. You get 2,000. Second impairment, that's all. Please, the impairment, put the two impairment figures together. What's the two impairments? The first impairment is what?
I think 2,500.
2,500.
Plus the second impairment is what?
3,500.
What's the total impairment?
6,000.
That's all. So balance sheet, under your non-current assets, say non-current asset held for sale, what figure do you send them? What figure do you send them?
So you are going to send the first, the
Mhm.
27,500.
No.
No, sir, the 24.
Hey, 24,000
Yes, because this one there.
is the current, yes, is the
Thank
current number.
That's all. Is it difficult?
No.
So this is what they were asking you to do. So this is the final answer. Then your workings, you show workings for us. You start cost 40. Accumulated depreciation 10. You do your calculation. Show working. Carrying amount 30. Fair value cost to sell 27,500. So impairment 2,005. When it comes to subsequent measurements, carrying amount 27,500. Fair value cost to sell 24. Impairment again. Impairment again.
3,500.
That's all. This is workings. And these are the final answer. So whoever does this will not get the full mark. Take notice. Why? Because the examiner said what? Show the account, how it will be accounted for in the financial statement. If you go to the examination room and hear the word financial statements, what goes to P&L, what goes to balance sheet. That's all. And your workings. I've given you, if you have financial statement among your standard, what goes to P&L, what goes to financial position, then what again? Workings and explanation. That's all. Workings and explanation. Yeah, you can explain. Please, at the working side, you can explain yourself. It's not everything you can calculate. So you can say workings and explanation. So some areas you can explain. Why? Because lower. Further impairment need to be charged. Why? Something like that for us. I'm done with IFRS 5. The rest of the questions are for you. I have a very complicated question. Let me see if I can. In your intervention material, there's a complicated question in it. Let me see if I can scan through last question for corporate reporting. And I'll leave you, and I'll go and do my next standard. IFRS 15 and then the 16. Then I clear at least your 5 standard that will drop. I want to do 3 of them fully. The rest, now they're young. Now they are young. Now they are young. It came recently, yes. This question is May 2018. This one came recently. Recent question. I'm solving this question. This is a final level question. Or I was going to solve the other one rather. Okay, let me do this one for you. Asawasa Limited, 5 solid units. Done. So today is a war night. If you are feeling sleeping till you drop off, last person receive the question. In respect of Asawasa Limited, year end 31st December 2017, show, they say show, and briefly explain, write story for us. I beg you. Explain means write story. Write story. So if you go crana, say you can't calculate crana, you can't write story for us. Write story. You say explain. The amount show. So here we don't need what goes to P&L. The amount that should be recognized non-current assets. We did not mention any financial statement here. We didn't say how it will be accounted for in a financial statement. Take notice. Here we never mention financial statement here. We never mention accounted for. We say show and explain. So here you only calculate and explain. That's all. Calculate and explain. Know what goes to P and then what goes to balance sheet. That is all. So let me quickly scan through this question. This is just 5 minutes. We are done. Asawasa Limited made a decision to sell a business unit on 15 June. They made the decision on 15 June. And the criteria to classify the unit as held for sale were met on 1st July. Oh, but I'm coming now. So when do you think we should end the depreciation? They made a decision on 15 June, but the decision was met, the condition was met 1st July. So when can we depreciate the asset up to?
Sir, please, 1st July 2017.
Why?
Because that was when all the conditions that would assure them that the assets will be held for sale was met.
Okay, that's all. So you see, this is a question they give to the final year student too. Corporate reporting, their question, no. Good. Asawasa Limited accounting year end 31st December, good year. As at 1st July 2017, the carrying amount of the assets and liabilities of the business unit before any 2017 what? Before any 2017 what?
Depreciation or revaluation adjustment.
Was as follows. So that means they have not depreciated. So how many months are you going to depreciate the asset in 2017? How many months? You can see. How many months are we to depreciate the asset?
6 months.
Why 6 months?
He said, at 1st July 2017, the carrying amount of the assets and liability of the business unit. So that's what I was thinking before any. Oh, okay. That's before any 2020.
Please, you are right. Though.
I
The answer you give me is right. But I just
I
want
still stand by it because it was not depreciated. They say since 1st July 2017, so it is 6 months.
you are right. So how many of these assets can be depreciated? How many of them you can depreciate them?
You can depreciate 2, the land and building and equipment.
That's all. So we need to do that to find the carrying amount. So let's start. He said that the land and the building were held under revaluation model. It's good. Can I explain something? If you meet a disposal group, this is one is called disposal group or discontinue operation. Please, the carrying amount after adjustment. Pick the carrying amount after what? After adjustments. All of them. Don't exempt any of them. Then you compare it with the total fair value. Let's go to sell for the entire group, not individual. It is taboo to pick the individual because you are not going to sell the asset individually. They are together. So pick the overall fair value. Let's go to sell for the for all. Even when the examiner gives you the individual, go and pick the overall total. But the carrying amount, you pick the individual carrying amount and sum them up to get the total. But we don't do that for the other one. So take note. So we are going
Sir,
to.
please come. Sir, please again. I don't understand. Please again.
You see, after we get the carrying amount, we must compare it with what? Fair value. Let's go to sell. But the carrying amount, you have to pick the adjusted carrying amount, not the one they give you. Here, depreciation has not been charged. They have not done revaluation. So you have to depreciate. Those who have to depreciate. After that, you get an original or proper carrying amount. When you get a proper carrying amount, then you compare it with the total fair value. Let's go to sell. Sometimes the examiner will try to give you the individual fair value. Let's go to sell. Don't make a mistake and say, I'm summing them up. Don't do that. Because some of the assets, if you are selling them together, their prices are different, true or false?
True.
Compared to if you are selling them as a whole, individual. If you go to Abosokan, aka the Scrap City, and you want a particular small part of your car to buy, they say, no, madam, we sell everything complete. The complete one is 1,200. But that small thing you want is 1,000 Ghana. Hey! So here, do not sum up the individual. That's all. I'm done. Now let's read. The land and building were held under revaluation model. Please, revaluation model, you pick the revalued amount as at the time they did the reclassification. And they were last revalued 31st December to 120. So this 120 figure you see here is as at 31st December. We don't want. Their market value on 31st of July 2017 is 124 million. So what's the revalued amount? 124. Selling cost is estimated to be 2.5. Ignore. Don't pick that one. So here it means if I'm doing my computation, the actual carrying amount for the asset they are, what with the actual carrying amount of land and building?
120.
124. That's all. We are done. Let me go again. Let's go to note 2.
Sir,
Yes, please.
okay, it's okay. I was confused when I saw the PPE. I was thinking we are supposed to add the equipment to the 120 before, but the second point explains it, so I'm okay.
Okay, so they say the equipment is held under cost model of ISST. The carrying amount was purchased on 1st July 2015. The equipment was purchased on 1st July 2015 for 80 million. And it's been depreciated straight line over 4-year period to zero residual value. First, calculate the depreciation for me. I need 6-month depreciation. 6-month depreciation. The cost of the asset is 80. Useful life is 4 years. Who can calculate the depreciation for me? Depreciation.
Say I had 10,000.
How do you get a 10? Show it.
Okay. The 80 million
Mm-hmm.
divided by the 4
4.
times 6 times 6 over 12.
Good. So what do you get?
10,000.
You get 10,000. That's all.
Yes.
So, and they've not depreciated the assets. See, the rest of the story, we don't need them. They said the sale value is 55, selling cost is insignificant. So, this is a fair value. See, the examiner intentionally give the students fair value, less cost to sell individual assets. And we don't want that. Because this is not an asset where we are going to sell individual, two of us. It's an asset we are going to sell combined. Like Aboso kind spare parts. It's combined. Madam, this one we don't buy the complete, take whatever you want and keep the rest. So yeah, the equipment minus 10, what do you get? Minus 10, what do you get?
40.
So I can tell you that inventories, receivable, don't worry yourself. Oh, never worry yourself. Repeat them. 30, 20. Why am I not worrying myself about this? Even though there's something was said about them. Why not worrying ourselves? Who can explain? Because current asset and current liability fall outside the scope of what?
Also.
Thank you. Because they are not non-current assets. They are not. So you see, if I want to be very clear here, note 3 talks about trade receivable. If you watch note 3 carefully, you say trade receivable are recorded at invoice value. Allowance for credit or losses, no adjustment or allowance need to be done. The realized value is here. Inventory, there was something said about inventory. Inventory was purchased for resale at a cost. The market value of the inventory is this. Selling cost is all this. You see, nothing needs to be done about inventory. It was anticipated that, now read the last note. It was anticipated that on 1st July 2017, the business unit, I love that, the complete version, the entire, everything will be sold for 200 net selling cost. So what's the fair value cost to sell? So let's come here. What's the fair value cost to sell? So give me the current amount first. Calculate the current amount and give me fair value cost to sell. Fair value cost to sell. Fair value cost to sell. Give me
188.
good 188. Then the current amount is what? A fair value cost to sell is what?
200.
So what do? What will be the value for? Which one do you pick?
188.
188.
Good. And then the examiner said, which of the assets among them can we, what will be the total asset that can be classified as held for sale? Among them, there are some assets that don't qualify to be part of non-current asset held for sale. Which ones do qualify? Only the
The
first.
land and building.
Land and
and
building
equipment.
So the answer is that after you do the 180 plus, then you go ahead and tell us that the asset that qualified to be classified as held for sale, the individual asset, they are these two. Add them together, what do you get? 164.
164.
So the marking scheme should capture 164, 188. And lastly, but here there's again. What do? We say do what? Do nothing, true of us. The first time, if the fair value cost to sell is more, do nothing. Remember, I wrote do nothing somewhere before you.
Yes.
So do nothing. Don't write anything. Do nothing. That's all. That's all for this question. This is a final level question. Oh. Final level question. So now notes. We are done. I'm done. let me give you one question for you to screenshot. Let me check. Look how the examiner did. He did the same show. He gave them 1 mark for adding up and get 188. He gave them 1 mark for picking the 200. He gave them another 3 marks for doing 164 for them. That's all. This is a marking scheme. This is how they solve it. That's nothing. It's 5 marks. This from here to here is 1 mark. You doing the comparing and selecting the lower, another 1 mark for you. Haka clear no marks in the show. Haka clear. You picking the right asset together. Yes, actually 3 marks. I say 5. You know be any asset. So take notice of that and you'll be fine. That is not
They when you're 45, the 5 we can one.
when him in this I don't met this on almost here IFRS 5. Send a many hints or IFRS 5. IFRS 5. I don't met many hints and I said Meso IFRS 5 won't die be and me find no. IFRS 5, any employee benefits and share-based payment, those 3 standards, and IS 24, related party transactions, me found cry. What are the 2 conditions that must be met in order to present discontinue pre-down? We've done it already, no. So condition here. Undo condition here. Please, you have to define the asset first. This question is yours, so take your time and solve it. Take your time and solve it. Here too, you see, look. Just look at something. Look at something. For your eyes, look what the examiner have done. They give you PPE, intangible, current assets, non-current liabilities. So which of the assets that do not qualify? You have to, like if you are doing the evaluation, you have to maintain them. Which one do you have to maintain them? Which one you don't need to worry yourself about their valuation?
The current assets.
Current assets.
Current
Because I did not add non-current liability to
Yeah,
it. So you won't mention it there.
the non-current liability.
So all of these, if you are doing a calculation, copy them, they are free. Copy them. Copy. Very interesting. Anyway, let me start back on. Let me just come through this and then I'll give you last question. For you go and try and answer. I'll show it to you. I've timed that question. I solved it last 3 certain intervention. Yeah, I did it. Last 3 certain that question I solved it. Mukone Badia Bemdo. Beacon Limited acquired all entity shares, all the equity shares in Jamila for a consideration of 1,250 million. Please, if you get this pair, the current amount and the fair value of the identifiable net asset at acquisition is 1,002. What comes to mind? With the OT assume we then about 3. Please, if you hear consideration and net asset of the subsidiary, what comes to mind? Hey, my people, what comes to mind?
Yeah,
Good.
Goodwill. So immediately do work is and calculate good 1 mark free of charge. So who can cover the goodwill for me? What's the goodwill here? Please, what's the goodwill here?
So I'm coming.
How do you calculate goodwill? Consideration is 1,250.
Yeah,
The goodwill is
1,250
20,000.
plus.
20 million.
So find somewhere. So when you are listing your asset, goodwill should be first on the top 20. That's all. That is all. On 30th of December 2020, Belcon was in the process of selling its entire shareholding in Jamila. So it decided that Jamila should be treated as what? As what? disposal group in accordance with IFRS 5. These are the assets they have here. So I am only going to read how I can massage PPE and intangible assets. I'm done with the question. I will maintain these figures here because the issues of so when you come here, this note there is about. They say the group has a policy to value its equipment PPE with IAS 16. There have been no revaluation or any other gains or loss included within Jamila's limited different components of equity since the date of acquisition, as the carrying amount was deemed to be close approximation to its fair value. However, on 31st December 2020, a property with a carrying amount of 330 was considered to have a fair value of 340. What can you say? If you have a carrying amount of 330 and your fair value is 340, what can we say? What can we say? Please, what can you say? What can you say? What can we say? Please, what can we say? Is it a gain or loss? Carrying
It's
amount.
a gain.
A gain of what?
10.
A gain of 10. So you only go and add a 10 to it. So just come and add a 10 to PPE. So PPE here is 3 what?
836.
So plus 10 would be what?
946.
Plus 10, oh.
Where from the 9? Isn't 846?
Good. I'll take that. That's all. Hey, no adjustment to anything again. They said that no adjustment has yet been done with the fair value. The total, I love this. The total fair value, let's cost to sell of the disposal group was what? 1,022. We are done with this question. But here, watch something else. Let me come back to this side. Let me arrange it. So here, what will be the adjusted carrying amount? The adjusted carrying amount here will be 46, right? Let me write it here. Adjusted carrying amount. So, let me write it here for you. Adjusted carrying amount. So, adjusted carrying amount. Goodwill is what? 20.
20.
PPE is what?
846.
846.
Intangible is what?
428.
428.
Current asset is what?
584.
584. Non-current liability.
Non-current liability is what? Non-current
Negative 322.
Negative 322. This non-current
Yes, please.
liability. Hello. Yes.
Current liability.
Okay. Send me a message or a mail.
254.
Negative 254.
I'll start this on WhatsApp. Please add all together for me. What do you get?
1302.
1302.
302. Please, how much you also confirm?
Yeah, you see.
Confirm 1302.
Okay, so that's 1302. Good. What was the total fair value? Let's cost to sell.
1220.
Good. So here, what can we say? Is there any impairment? 1220. That's a fair value. Let's go to sell. And this is a current.
82.
Is there any impairment?
82.
Impairment is what?
82.
82. There's a problem here. What's the problem?
And
Oh, you are right.
yeah.
But there's still a problem. What's the problem? The problem is that this 82 is for all the assets within the group, two of us.
It's true.
So we cannot just look at one person and give it to the person. So therefore, we have to share the impairments. We call it allocation.
Allocation of impairments.
So you draw another table here. Then you say impairment charge. Then you say current amount after impairment. So here, first, goodwill.
Go.
So 20 gone. How much left? Please, all the three assets,
62.
all the three assets, the current asset and non-current liability, whatever, for them, they don't qualify. So please, you can decide to put dash there. Agreed.
Yes, sir.
So how much left?
62.
62. You must share this on pro rata basis. How many assets left?
2.
So share 62 for the 2 assets left. Left the PPE and what?
Intangible.
Good. PPE and intangible assets. That's all. So share it for me.
31, 31.
Why no?
No.
It's
On pro
supposed to
rata
be
basis.
846 over the total of the 2
Yes.
times the
On pro
62.
rata. Why do you say 31, 31? You don't want stress, eh?
Plus 42.
Okay, so please share it on pro rata, meaning that 11 these 2 assets, sum them up, then you now say 846 all over the total asset left, which is 846 plus 428 times what?
62.
This is what you get.
42 for the first one.
This one is 40, the other one will be what?
20.
20. Oh, the balance. If you sum them up, you get the total impairment of what? You get your total impairment of 82. Then you now find the current amount after impairment. Good will be dash. 846 minus 42. You get 804. 428 minus 20. You get 408.
8.
The rest you copy them.
Okay.
Here will be 254. So if I should end here, give me the total asset that can be recorded as non-current asset held for sale.
So target, it will be the 2.
Good. 804 plus what?
408, making 1212.
All right, so I'm done. Now take this question home, try your hands on it, and I move on to the next standard. The next question I'll be looking out for is that it's in your intervention material. Let me go there now to show it to you. Go to the intervention material. And then there's a particular question. Hey, I cannot locate my question. The question is on, I cannot locate my question. I'll see it. Let me make it big. I'll see it. I will see it. I will see it. Let me make it big. It is the latter part. In that question is the C and then the D. This one I've dropped already. It's not this one too. This one I've dropped already. Drop. This question 5 is yours. Question 5 in your intervention material. I don't know where you pass to solve them. But those that will do smile. All right, so the question of the day. Oh. The question of the day is on the IFRS 5. IFRS 5. Okay, so in Zima, we did it yesterday. We did it in Zima yesterday. We did it in Zima yesterday. We did it in Zima yesterday. Aspire. I don't know where you have to pass. Question number 10D. I need the solution by the close of tomorrow. Wherever you pass, solve it. I've solved this question before, but not this. I think about some time back. It might be on the YouTube there. If not, please, wherever you pass to solve it, pass and solve it. I need my answer.
Sir,
Yes, please.
I hope you are talking to the corporate reporting people.
Yes, please.
Oh, okay.
Okay, so on that note, I'm done with IFRS 5. My next standard is IFRS 15 revenue. That is on my mind now. If you have any question, ask before I switch to revenue standard. And I explain them. All right, so revenue, let's summarize the revenue here. But before that, let me end this section then. We need to this question has a lot of issues, a lot of things that will be interesting. I'll come and solve it, I think, 2 days before your exams. I'll come and solve it.
Hey,
So, but on assumption that everybody solve it.
so my network went off. Is that the assignment?
Yes, please.
Oh, okay.
I'll come and solve it on assumption that everybody solve it 2 days before your exams. 2 days before the exams, before the paper. So try to be fresh. All right. Raven. Let me save my whiteboard. And this and start revenue.